So financials key factors. So starting with the basics, that what all three important things we will discuss. First, what is exactly mean by the assumptions and drivers? Because when we are working on our financial models, very important need to really justify that on what basis and what one log and in what logics you are really justifying that numbers. It should be not basis on the maths. It should be completely basis on some merits and logic. So assumptions make a lot of difference, and drivers. You should know that which are those drivers are really making that validation of your all that logic. So assumptions and logics and drivers are very important. That is your basic first information which financial models is based on. Second, the reality check that whatever assumptions and projections you are showing, but it has to be completely attached and associated with the current facts. So the current run rate and the contributors. Unless you are not knowing what exactly you are standing today on, if you are not knowing your current ground, then obviously whatever castle you are creating, people will easily figure it out that either it is basis on some just dreams basis, or maybe you are trying to just show something basis of the groundwork which you have already done. And the third one is the sensitivity analysis and some factors which will help you to justify your point that yes, whatever numbers and facts you are showing, that is going to make some sense, and you have done your sensitivity analysis and you know the factors why this will happen. Let's take one by one. The first thing is assumptions. Now we all know that. So in any of the finances or any of the accounts, there are two. These are the two important factors. Leave aside capital kya hoga, assets kya hoge, but the major thing is and any finances is your sales, it's your revenue side, and on the other side it is expenses. So we should know that what is our revenues are coming from and the expenses are coming from. But which are those key important factors normally we are missing out? First, we should know that whatever gross margin we are earning. So, unfortunately, we are all focusing on the net margin, what money we are making. But unless we are not sure that what kind of a gross margin we are making, then obviously there is a challenge because we are not sure what all those factors are really affecting and impacting on our services. So, I hope everyone is aware about that what exactly mean by gross profit and how to calculate. It is simple formula that the cost of goods, in case if you are in a production or in case in the product sales, so whatever cost of the goods you have and whatever revenue you are generating out of it. So whatever margin you are earning, that is minus. So gross margin is your revenue minus your cost of goods is your gross profit. Now, when you are calculating your net profit, it is a simple that revenue, the total revenue which you are calculated, and the total cost means apart from the one is the direct cost and another is the indirect cost. So the revenue minus your all total cost divided by your revenue, that is your net profit. So you should know that what is your gross profit and what is your net profit. And whenever if you go to your investors pitch and if you are not aware about these facts, these numbers on tips, somewhere it is showing that you are not completely into the business, and it is too common that founders are not keeping themselves ready and updated on this. This is something which you should have on your tips on daily basis कि मेरा gross margin और मेरा net profit क्या चल रहा है. Now again the big mistake normally it is observed. हम कई बार business जब कर रहे होते हैं तो we used to have a multiple verticals or maybe multiple products or items, but there are many times we observe there are one or two items are giving good margins and that is actually sustaining and surviving the whole company. Unfortunately, we are not keeping that right track on it. We are not keeping the trend of that all facts that which are those real items and product or services are really giving 100% good gross margin and net profit, net margin to us. And that is where we get. This is on my own experience, I can tell you that. So I was having 6 verticals in my second round when I was raising a fund. And that time, out of 6, one was really eating up my maximum expenses of my phone. And I can admit that that time I was not even bothered about it, and neither I have got into that. Later, once someone has questioned me, I came to know that that vertical is really denting me, and just by removing it, my figures was completely looking different. So I understand once we have got into operations, many times हम लोग भूल जाते हैं कि ये सब चीजें भी important होती है. So you should know that Item wise, service wise, vertical wise, item wise, what is your gross margin and what is your net margin? Because this will help you to justify that which are those items and verticals are really making good and where you are really burning out and what actions you are taking against that. So item wise and gross margin wise, net margin, you must know about it. Next is your the three this important factors you should know about your this assumption. One, the growth factors. Which are those important growth factors do you know that which are real driver of your this whole finances or revenue? Unless you are not aware that which is those factors are really helping you to grow, when something is happening by fluke, है ना कैसे चल रहा है मुझे पता नहीं है लेकिन अच्छा चल रहा है, that should not be the answer. You should know the key reasons, which are the verticals, which are the product, and why that is really doing great, and what all the chances you have in case if those items get affected, what will happen with your business. Second, the run rate. It should not be in such situations where your run rate is fluctuating, that one month you are doing a 200% growth, second month you are doing something else. So the trend need to be really aware about that. What is the current trend you have? You cannot say that कि average मैंने ले लिया और उसके basis पे होना चाहिए. Third, the correction points. Even though if you are in any business, it is not necessary or not required that everything will perform every time great, but not knowing about it is something is big challenge. Being a founder of the company, you should know everything that कि हाँ जो अच्छा हो रहा है उसका reasons क्या है, जो नहीं हो रहा है अच्छा उसमें क्या corrections करने की scopes बचते हैं. So if you are having that points in your thoughts, then obviously you can at least justify that okay, maybe for one quarter we are observing it, maybe we are going to take some corrective actions or we have already taken some actions against that. That shows that yes, you are involved in the business, you are involved in the finances, you are involved in the whole ground facts. So these three factors are more like your assumptions and drivers. Second is your key run rates and your key contributor. Again, very small thing, but these are helping you to really represent your numbers. See, end of the day, everyone work on these two factors only. Everyone is working on sales, they make a revenue. Everyone is working on expenses. But how you represent your numbers, that is the whole गेम चेंजर, नथिंग एल्स. आप किस तरीके से अपने नंबर्स को प्रेजेंट करते हो और किस तरीके से उसके साथ में प्ले करते हो, वही सारा खेल बदलता है, खास करके वैल्यूएशंस में और आपके बिजनेस के प्रोजेक्शंस के ऊपर. देयर इज नथिंग एल्स यू कैन जस्टिफाई. बट इफ यू नो योर नंबर्स, अगर आप अपने नंबर्स को बहुत अच्छे से जानते हो, यू कैन प्ले विद योर नंबर, यू कैन गेट much more benefit out of it, and that is the thing. Now in the revenue side, when you say I have a revenue for the whole 1 year, maybe for a 3 months or 4 months, please every month keep some trend. You should know about that, what kind of a trend you have. Monthly, either there is a profitability change, there is any kind of a pattern which you can observe, which you can justify, or if you should know that in case if you have already come across the whole year, how it is, how the weather condition is affecting on your business, how the season is affecting on your numbers, how and which areas are really making any change in your whole business. So somewhere you know that yes, during this period, what all changes is going to happen. Now here there is a debate. Either your investor will simply debate on it that maybe at the last 2-3 years he will consider that okay, I will just consider your last 3 months counter only because you are just doing a 5, 6, 7%, so maybe around 6.5 or 5.5% is your average. You will debate that okay, my numbers are much more than that, you should take a complete average of the total year. Here, if you know the reasons why this number is reducing down, then if you know that on what basis these numbers are reducing and how you can revive it back, possibly you will be in much better position to justify it. And if you are not aware, obviously you will take a pinch of your salt because they will take an advantage, they will negotiate कि नहीं यार आपका तो सेल्स गिरते जा रहा है, आप तो अच्छा नहीं कर रहे हो, उसमें कुछ खास नहीं हो रहा है, then obviously you will accept the facts कि हाँ गलत हो रहा है या कम हो रहा है. But despite of something is going wrong, if you are aware about that why it is going wrong, if you can justify that and if you know the reasons and if you can make it make other people understand that ये इस reason से हो रहा है, तो शायद आपके पास फिर भी stand strong. Second, on the expenses side, you should know which are the important contributors you have on the expenses side. You cannot simply say that okay कि हाँ मेरा हर महीना बहुत अच्छा चल रहा है, मेरा sales grow होते जा रहा है, but in case if your sales is growing in X percentage and your expenses is also growing in the same percentage or maybe in some maybe in some extent, but अगर आपको उसका रेशियो नहीं पता है कि हाँ आपका मैन पावर कॉस्ट कितना परसेंटेज जा रहा है, मार्केटिंग कॉस्ट कितनी परसेंटेज जा रही है, एंड द ट्रेंड ऑफ योर एक्सपेंसेस, नाउ मेनी पीपल आर क्वेश्चनिंग एंड गिविंग मी, बहुत सारे लोग पूछते हैं कि सर देयर आर सो मेनी कंपनीज which are doing losses but still they manage to get a good round of funding. The only reason is they manage to justify that yes, my gross profit is really going well. My gross profit is monthly growing by X, Y, 10, 30%, 30%, 40% on growth. My expenses are reducing down or it is going on flat ratio. Now, of course, with the volume, it is going to increase. That maybe in case if you are doing a current है ना और एक्स रेट अगर आप कह रहे हो कि हाँ मैं एक महीने में 1 करोड़ का बिजनेस कर रहा हूँ, so obviously for doing a 2 crore business your manpower cost will increase, your marketing cost will increase, every cost will increase, but at what percentage? So if you are calculating your all these expenses against your sales and if you just try to show that कि मेरा जो marketing cost है वो मेरी sales का X percentage जाता है and maybe after some period it is reducing down. Maybe today I am spending around 23%, but gradually after 3 months, 4 months, 5 months, it will reduce down to 10% or 12%. In any situation, even though if you are doing a great business, if your numbers are growing, but if it shows that your marketing cost is on the increasing side, your manpower is on the increasing side, that shows a wrong trend to the investor. That shows financiers or the right understand of the people those who are from the right finance background, they will pick it very well. That maybe at some point of a time, maybe today since your number is good because you are doing good, your market is responding, your market is supporting to you. Possibly today you are making a good sales, but tomorrow it will come on that again situations where this two lines will maybe come and collapse on each other, and again you will start losing money or maybe you will come on a break even. So that trend need to be really play around and you should know your numbers well that ये क्या percentage में जा रहा है, and you can play around this very well. If you know that my manpower cost is on a reducing trend, my marketing cost is on a reducing trend, and after one point of a time it will be completely flat or maybe it will increase only by few percentage, that is somewhere you can take a best advantage कि आप अपना ज़्यादा valuations के लिए या फिर ज़्यादा benefit के लिए उनको justify कर सकते हो. And at the same and at the last, of course, when you are justifying your valuation, only one important factor we have to justify to the investor कि at what point of a time my break even will come, and when will be a situations where the company revenue can really have that strength where the company can themselves give an exit to the investor. No matters, you can say that okay, in case whatever money we are collecting or maybe whatever cash flow we are going to have in the company, may that money we can revive, we can reuse for the growth purpose, but you have to justify that in case if I am not doing the growth, consider if I am keeping the flat business and if I continue with this money for another maybe 4 years or 5 years, after 5 years, this kind of a money I will be having in bank and I can give you an exit by 5x or 6x or 7, something like that you can justify. That is something a strength of your finances to prove it, yes, you are working on a right business model. That is your run rate and you should know your run rate very well कि अभी क्या हो रहा है. ज़्यादातर यही गलतियाँ होती है कि हमको हमारा करंट रन रेट पता नहीं होता है and we are more focusing on only projections because we read the projections very clearly because it gives a very great pleasure to show कि मैं इतना बड़ा कर लूँगा, but अभी करंट क्या चल रहा है वो ज़्यादा important है because that is something which anyone would like to know. And the last important thing is your sensitivity analysis and factors. So which are those important factors you should have in your mind? One, your capital block factors. No investor is happy where you have such kind of a business where maximum money is getting blocked and you are not able to utilize that money. Maybe अगर आप deposits में बहुत पैसा block कर रहे हो, assets में बहुत सारा पैसा block कर रहे हो और आपके पास में running working capital की कमी हो जाएगी, then obviously that business is not advisable or people are not taking that much interest because company, any investors or any well-wisher for the company would always want that the maximum money should have with the company to do a multiple check, test and trial because in a startup, unless you're not taking your chances, unless you're not going for a that leap, obviously there is no big gain is possible. And second is non-productive verticals on expense or expenses. You should know that in your company which are the verticals and expenses are really burning you. अगर जहाँ जहाँ आपको कमियाँ लगी हैं और आपको पता ही नहीं है, that is something which you should know, and that is the principal responsibility of any founder and promoter. Growing manpower number, because manpower and marketing is one of the key maximum business. These are the two important key contributor of the expenses. So you should know that, because people are not happy investing in such companies where manpower number is growing with the growth, because everyone knows dealing with manpower or managing manpower is one of the biggest hurdle in any of the growth. So it's a major roadblock for any of the company to really grow. So people want more technology oriented. People want something which can really change against the less manpower. Sorry. Then the marketing dependency. You should not have a business where you are simply saying, I'll keep pouring a money and I will do a marketing, then only the business will come. So such business is not. It is a linear business model where पैसा डालेंगे तभी आपका sales होगा. Because if that is something which you are calculating, that is not the right approach for the investors or maybe for the startup. Tax and compliances irregularities. ये बहुत जगह होता है, सबके साथ होता है, हमारे साथ भी हुआ. So if you are not compliant and not keeping the track of your taxes and compliances, I think you should gear up. If you're really keen to raise money, you should have your books very healthy. It should look like that, yes, you're disciplined and you're maintaining your books in a proper regulated format. High aging debtors is something which is very risky situations, because अगर आप कह रहे हो कि मेरा sales तो बहुत अच्छा है, I have a great sales, but I am not able to collect my money. I have not collected my money for almost 6 months, 3 months, 5 months, 1 year. Then obviously there is a inflation of sales. So again, many investors are not agreeing on it, and people or any investor is not happy with such kind of a business where investor rather founders or the company doing business or focusing on the business, they are more into collecting the money, right? The collection of the money in the business is something which is too key role to play. And if your business is something which is blocking your cash flow, something is risky there, so they are not happy with. So you have to figure it out that how you can manage your debtors maximum within 30 days. High aging creditors, that is also risky. Somewhere if you are collecting money, you are having a business with you, and for XY reason, just because of the fact that you are not paying to your creditors, that is also a bad, because slowly gradually it is converting into liability. So you have to balance your debtors and creditors in a both way, that both should not cross 30 days. And projections not matching with the current run rate. This is one of the biggest factor and biggest reason. There was a survey in one of the economic times that in venture capital raise round, 63% people are failing to get their round, or they are not able to bank their round, only because they are failing to justify that what projections they are showing, it is not at all matching with their numbers and books, because they show projections completely different on the presentation pitch, and then it comes on a due diligence part, that run rate and their current performance and current numbers are completely different from what they are showing. So that is something which we have to really focus on, that what currently we have. So we have to show the extended part of what currently we are doing. No matters if we are doing less or wrong or low numbers, but from there, how we can improve it. That trend has to be there. So in case if you are 2-year-old or 1-year-old company, so your financial should be given in a trend format, that maybe the first year I'm doing this, and from this onwards, once the pre-money and post-money, how the finances will look like. If your current run rate is something else, and if you are trying to show something else, that post-money only some magic will happen, no one is going to accept it. I just take it. So don't show something which is unrealistic, or something which is just basis on assumptions and your thought process that it may happen. So if you have a proof, if you have done a trial, then of course you can show that trend, that numbers, even it is for a 1 month also, you can justify that, okay, I have done some changes, now this trend is returned back, or maybe this new trend has been observed, and basis on that I can show that this number will come. So it should be basis on the right merit and facts on the ground, not on the maths basis. कुछ भी हो जाएगा तो चलेगा. Okay, so these are the few factors when you are making your financial model you should keep in your consideration.